Hey guys, Doug the retirement guy. Got this report from a viewer of ours. Should I invest in MSTY into my retirement fund for more income? This is a YieldMax ETF. They're showing a dividend yield of 97.89%. It threw up red flags immediately. So let's get into this one and see if this fits or not. MSTY is the YieldMax MSTR Options Income Strategy ETF. So the first thing you're probably asking, what is MSTR? Well, MSTR is the abbreviation for MicroStrategy Incorporated. It's an American-developed company that provides business intelligence, mobile software, cloud-based services. It was established back in 1989. Oracle is a huge company for them. SAP, IBM. They are really one of the big companies that has really helped put Bitcoin on the map by using a lot of their components and the proxy of MicroStrategy's holding a lot of the Bitcoin currency. So it's kind of one of these things. We're in multiple different fields, and cryptocurrency is a huge part of their platform. Their distribution rate, they say from their website, is 106%. Their 30-day SEC yield is 0.00. So let's get into what are they actually holding. So when we look deeper into this, they got $1.9 billion in assets. They do buy into the MSTR stock. They hold the U.S. Treasury bonds, which is very familiar with a YieldMax program. One thing that they do, they sell these options, but they do not invest directly into MSTR. So they're constantly buying options here and there and then doing a lot of treasury bonds on top of all that. So it's a very interesting strategy. And again, I think you've already seen it's going to be a high reward, high risk situation. So we have to ask, why MSTR? Well, MSTR advertises returns of 97.89%. You see on their website it was even higher than that, but this is what they've rebalanced it to, and a 0% 30-day SEC yield. Well, of course, the 97.89% return is a total return over a specific period, which includes income from dividends, interest, capital gains, and so on. A return of 97% is not unusually high. It is outrageously high. And it doesn't suggest a significant risk. It warns that it's a huge, huge risk. So it's you got to be very careful with this because your funds are going to go up, down, sideways, every which way. The volatile is just crazy on this one. Your 0% on a 30-day yield tells you that there's a lot of chances of low or no payouts. They don't show a lot of strategy for income. So again, this is a warning sign of we got to really walk the minefield with this one. They are all about big returns. They're doing monthly dividend payouts, but they're not guaranteed. So that means they may go 1, 2, 3 months without paying a dividend. They don't have to in the way they have it established and set up. But when they do make a payout, normally it's a decent size return. Here's the big thing I say. If you get a great return on it, if the dividend returns generate 97% as they say, then the return on your investment, the ROI, would realistically almost be less than 1 year, which would be huge, but we got to keep that in consideration. Let's take a look at the posted return on MSTR. First off, I want to make sure everyone understands, and we did put it in blueprint, that this fund started in February 21st of 2024. So we're really about 11 months into this. But the past 1 month, they're down 14.66%. Past 30 days, they're up 50.8%. 6 months, 75.05%. And sets inception, 225%. So it shows you 3 months, 6 months, some phenomenal returns. But the question we have to ask, what's happening now in the first month that they're down 14? And this is that volatility that I tell you about, that you can go gangbusters on one day and down dirty rock bottom the next day. They've pulled out some decent numbers at the 225 for a year, which is basically doubling your money easily. But again, there's a lot of you don't know. If something's too good to be true, you just gotta watch yourself. So let's take and put this in our little chart. If we put $10,000 into it when this thing started, we would have bought at $21.19 or bought 471 shares. Immediately the next month, the stock rocketed up to 38.1%, or excuse me, $38.1. We haven't seen that number since. And they did not pay a dividend that month. It came directly back down. I call it rebalanced itself at $26.75. Paid a nice dividend, $4.13 dividend. But the following month, the stock came up. Again, no dividend payment. So when we look at this over 11 months, we see 3 months out of the 11, there have been no dividend payments. But once the stock price balanced out, regrouped itself, at the end of those 11 months, you would have $13,506 in stock value only. That means you would have gained $3,506 or 35% off of your initial investment. Now we go to the income side of it, $12,869 in income alone. So that alone says you made all your money back, plus the value in the stock, plus an additional $2,800 from the income. Your total return on this would have been 129% just on income alone. When you add everything together, your return is 152% from the first day that this established. Say what you want, do what you want. Those numbers are unbelievably high. They are hard to ever maintain. But again, 11 months projection, you got to keep looking. You got to keep saying, why not? So let's take another different way of looking at this, and it's a price adjustment over time. So what we did is we took the price point of the stock at certain levels of each month and put it in this chart. So you can see when we started off, the stock took off to up to that $38 point. Then it tried to balance out down to that $26 point, came back up, balanced across, had a drop, had a slight increase, another drop, now a huge increase back up to that $30+ mark as it starts to settle down. Why we do this is really to give us a targeting point, which is what a lot of your stock people do. They give you a low point, high point, trying to buy at the low, sell at the high. You get all that. This has an average of 28.14 price point. So I always say if you're buying anything below the average, you're money ahead, because it keeps seeming to hold right in that magic little number of 28. So this just gives us a better idea of how do you deal with something that has such ups and downs, that's so volatile. How can you make a purchase in this in any way, shape, or form? And this is a way of looking at it, especially again when you have all these high returns. This could make a major game changer, but you got to buy accordingly and you got to buy right. So let's take a look at the summary of this stock. First off, as we say, the stock returned itself a 35% over 11 months. I have to give it a thumbs up. When you get double digits like that, huge return. Dividend return, 129% over 11 months. Now here's the thing. You have a non-regular cash flow. Over 11 months, they've missed 3 months of dividend payments. So again, it's going to get the thumbs up, but I got to say asterisk on that one. Stock total return, 153%, including dividends. Guys, I can always say is rock star. It's crazy. Your return on investment over 11 months, you would get almost 2.5 times your initial investment. Those are all strong pieces, and I can see why people are talking about it. So I do give this stock a 3 thumbs up across the board. Now the question is that we've always asked, is MSTR good for your retirement account? My answer to you has to be a no. Now I know that's probably going to shock you by saying no. With the great returns, all thumbs up. Let me tell you why. The non-regular cash flow cannot count on to pay you each and every month. When you are in a retirement account, you want steady positive cash flows from dividends. If you're turning around looking for something for a massive investment, well, again, I'd say no, because your retirement account, it's too crazy of ups and downs to rely on a solid growth. It's too risky. And that's why you want to have a low risk, high reward, regular cash flow to get a yes. So the returns are way too high to ignore. How should we handle this one? So MSTR, how do we invest in this fund? First, what we're going to do is use this fund as a growth creator. You're going to start with a very small amount. I say $1,000. I would not put any more than $5,000 into this. If I had $5,000 that I could just disappear tomorrow, never even affect anything I got, take that $1,000, $5,000, and put it into the stock fund. Once you recovered your initial investment, cash out the initial investment and then work off the gains. So again, this is not a set it and walk away that a lot of people want in retirement. But there are a lot of people out there saying, I'm short on my retirement. How do I gain money to help me down the road? This is one that I would take a small amount, get some short, quick returns, and then continuously go ahead and reinvest accordingly. So let's say I put this into it. If we took $1,000, bought the stock the day it came out at $21.19, we would buy 47 shares. Now that first initial jump took us up to $1,798. I would turn around and sell 26 shares of that fund. So I'd end up with 20 shares. I get my $1,000 back out of this, and then I let the system ride all the way through. And what we would have ended up with is the fund's value would still have had $599.47 in the fund. You then have all the dividend payments that came through, which was equal to $571 additional dollars, which means our fund value, after taking out our $1,000 already, we'd have $1,170 in the fund. So we got our $1,000 back. We got another $1,000 out of it. Great numbers. Now that's buying at the beginning. If you take a look, if you bought it in March or July, anywhere in there, as we remember, buy under that $28 average price, you would have you'd have still a nice growth because of the dividends and the price changes, but really you'd still have a decent number coming back. You wouldn't get it back in 30 days. It'd take you probably about 2 months to 3 months to get your money investment back, and then you can move forward. Now, our second way of investing into MSTR is what we use this fund as a growth creator, but using what we call a drip process, which is reinvesting the dividends. And we'll show you what the difference comes into. Starting with only $1,000 again. And once you recover, you cash out your initial investment. But what you do is you take and buy more shares with the dividend income and see what you got out of it. So again, we go back to that $21 investment, stock price, $1,000 into it. We bought 47 shares. We sell it the following month to get our $1,000 back out because we achieved those numbers. So we have 20 shares left in this account. Again, March did not show any dividend payout. So all of a sudden in April, we have a dividend payout of $4.13 per share. Pays us $86.48, which allows us to buy 3.23 shares of additional shares. So all of a sudden, we're now up to 24 shares. Well, no payout in the dividend, so nothing we can do there. We wait until June. We get $3.03 a dividend. We buy 2.3 cents or 36 shares. Now we're up to 26. We do the same thing for all the dividends that we get too. And at the end of the 11 months that we've done this process, we have more shares than we started with, 49.25 total shares. Our value in the account is now worth $1,409. So we took our $1,000, got our money back, and then we got $1,400 additional because we were paid $902 in income and we roll that back into the share price. So now this again is not built for someone who wants to live off their dividends or wants it for retirement, but this is a way to grow additional funds with someone else's money. The whole key is get your initial investment in and out as quickly as you can and let the money ride on its own. You do this over a 12-month, 24-month, 36 months, all of a sudden you're going to have, you could easily take the $1,400 and every year double it. So you could be at $2,800, you could be at $4,600 in 3 years. That's why I say this is a growth creator. So again, in summary of this whole thing, so again, is MSTR good for a retirement account? I still have the answer of no because of the non-regular cash flow. Use it if you need growth. Okay, if you need to grow your funds, over time, this could be a good growth fund stock to have, but be very, very careful. It's not a money machine. You're not going to take $10, $20, $30, $40,000 of your retirement funds, pour into this. I would love to tell you you're going to triple your money, but what you got to do is you got to be safe. It's only money that you can risk that you're going to lose, that you are not going to count on, because this may not be the one that you want. So again, if you like what you're hearing, give us a thumbs up. If you have any comments, this one could be a big one for comments. Put it down below. We'll be more than happy to discuss this with you through the comment side of it. If you like what we're doing, give us a thumbs up and hit that subscribe button. Don't miss any of these videos. And I want to thank the subscriber and the viewer who sent this to us. We actually reached out to YieldMax and YieldMax to give us more information on this, because this is a crazy fun. So again, thank you, and thanks for supporting the channel.